Good afternoon, everyone. Welcome to Thursday, June 5th, 2025 episode of Trading Trends. Today, we had some movement in the markets, mostly driven by one name. We'll take a look. There was an asset that moved, a shiny metal, and then there's a car maker that absolutely got shellacked today. We will take a look. Let's do the video. I'll also try to do one tomorrow. I was not positive I will be able to do one, so I want to get this one out for sure, but I should hopefully be able to do one tomorrow. Without further ado, let's get into it. So yes, Tesla really kind of crashed today. There was a big public spat between Trump and Musk. I'm sure you've seen by now. Musk saying Trump would have lost the election without me. Trump saying Musk has lost his mind. I wish he'd kind of return to good favor, et cetera, et cetera. He's going crazy with the EV credits, doing things for his company, et cetera. But anyway, what matters is Tesla brought down by 15% on this public spat, as well as it is a major holder, constituent of major sectors like XLY as well as ARK. We'll take a look at both today because they obviously got dragged as Tesla got carried out down 15%, XLY down 2.5%, ARK down 2.5%. So let's get into the tape. Further ado, let me un momento, por favors. All right. So let's first, as we usually do, go into the SPY, and then we'll look at some intraday moves, what really moved today, so on and so forth. My screen is a little bit of issues. Here we go. So Tesla, there it is, closed down 14%. Yahtzee. A big move lower. I think it was trading 325 this morning, continued to descend all the way to a $284 close. Other moves larger than 1%. NVIDIA down 1 and change, although you remember the semis had a really big day yesterday. I was highlighting STM, the European semi maker that lifted the space. Palantir, we talked about this yesterday. I said there was a very good chance that this could slip to 122 or so. There's just technicals that were shining on me yesterday, but then I did say that I do anticipate new all-time highs in Palantir within 2 weeks, that 135 to 140 mark. It was trading 133 this morning, all the way to a 120 close. I like to pierce, and we were talking about this with Tony from Italy yesterday, as a lot of viewers have their eyes on Palantir from the long position, and I would, admit the same thing, as it's up 470% in the past year, and momentum is your friend, and the trend is your friend until the end. So down 8% for Palantir. It's also in, the ARK basket, maybe friendly fire. I'm not sure if specific news came out for Palantir. I love the entry at 122. Obviously, it's a little bit more on sale here. My target really has not changed for 2 to 3 weeks from now for all-time high. So I think you got a discount today in terms of Palantir. I'll be looking at call spreads at the money, and then maybe selling, something against it to help subsidize, because the volatility is going to be expensive in that. Apple down 1%. This name continues to be one of the worst stocks in the market, and it's pretty surprising. Obviously, it's a major holding of Buffett and Berkshire and many people if you own an ETF. But Apple continues to just look like absolute garbage, and it's funny, not funny, but it's interesting how we are still just 3% away from new all-time highs in SPY. And that's kind of it for the larger, heavier cap moves. AMD down 2%, Micron up 3%. This is staging a bit of a comeback. We were talking about this with Patrick from Chart Reports. He was having a beautiful chart on it, so give him your flowers on that. And every time Micron rose to, I think it was a 50-day moving average, it just always technically was a sell, and it would decline. It's actually staging a nice comeback where folks care about it again. And MicroStrategy down 2.5. We will take a look at Bitcoin. Bitcoin has had a big week to the downside. We all thought it was going to break those highs, and then it stalled. We'll take a look at that chart. So here is the open. Similar to what we had the other day, we actually had our high pre-market. We had that spike of nearly 600 at 8:30 a.m. And then we got very close. We got to 599 here, essentially at 11:30 and noon. And then right after the European close, continued to sell off again, kind of like a broken record. New all-time highs in IFA, Germany, Canada. It's almost every day this week. It's just rinse and repeat. And then always a believer in technicals. This is a 200 bar moving average, each one constituting 30 minutes. Look at that. We break right to it at 3 o'clock, held, and we managed to close above that. It's 592.40 for you home gamers. But really, we gave up the ghost with VWAP at 12:30. I believe that's when really the comments started coming out between Trump more so, and then also there was also the communication with him and Xi and trade talks if they're progressing or not. So VWAP was 595. We did not close quite there. We closed at basically 593, so a little bit of a descent there. As I said before, so SPY to me has begun a bullish accumulation period starting on May 30th, and typically it's a 15-day cycle. It depends how much the rubber band of momentum has been stretched. But traditionally, what I've seen here is about a 15-day run. It's almost like how you can measure yourself for a PR, personal record on the treadmill. Similar kind of moves in terms of the market, depending on what the momentum is, essentially, right? So right here, we found our legs underneath us. Again, beautiful hold of the 200-day right here on May 23rd when things got a little bit scary, and a big gap above on May 12th. A lot of folks are looking at this gap, which is essentially very close to filled after that. We have a little bit more room to go if we get to 570, but I don't think it's going to happen. I do fully still expect our target to be around 600 to 602 on or around June 15th. So about another week and a half or so. And I think we'll get to about here. And folks will be very bullish. I don't think it'll be quite enough for the animal spirits in June to get us to those new all-time highs. That's still something I'm foreseeing for July. But a good-looking chart here, your 21-day exponential, and the 50-day is right here stacked at 579, as well as the 200-day moving average is 578. So as long as those levels hold, just simplify it, 580, anything above 580, the momentum will lift you to the upside, and I do think that's going to happen. Again, we're down 0.5% today on this the Mag 7 sell-off, if you will, driven mainly heavily by Tesla. All right. Today is the ETF edition of the show, and we're still talking about Tesla. That's how much of a move it was. But this was the big, also the opening of the show. Some of the metals, silver. Congratulations for all you holders. Looking at you, Steve Straza. A lot of people waiting for silver, waiting for this day. New 52-week highs, and not all-time highs like gold has been doing. Gold actually closed down a bit, I believe 0.5% today. They flocked into silver, up 3.5%. You can see that massive candle here. And that is new 52-week highs. It's on an all-time high for SLV. That was back in 2011 where it was trading $48. I know a lot of these silver bugs are still hoping for that. A nice looking chart, though, in terms of this as a trend trader. Obviously, there's going to be catch up in something like this, but I'd rather have the mustard, essentially, which is gold. And that's the leader. Gold, mustard, yellow. Yeah, a good-looking chart, though. Some tests here. An ugly beginning of the year, but still rising 200 moving average. A very, forgivable week here. When S&P went to 52-week lows, they kind of sold silver down to $27. I'm looking at SLV, of course. There's many liquid ways to play this, PSLV. And folks do that for optionality as well because it's a lot less denominated. I believe PSLV is like an $11 stock versus this at 32. But nice looking chart here. Obviously, new 52-week highs. We are not overbought yet. And the interesting thing is we were overbought back here basically the week before Halloween. We got to 74 RSI. And here we're not even overbought, but new high. So I think we're good here for silver. It's been a very nice rip just in the past week from 30 to 32.5. Congratulations if you caught that move. The flows still look pretty excellent since early May here. I like the activity had basing between 30.5 and 29, and nice that it's broken above now with 32. My forecast for the next 2 weeks, of course, never like to stand in the way of momentum, especially with a candle like this. Could we go a little bit higher? Sure. Trees don't grow to the sky. However, my full valuation target for SLV right here is about 31.5. So to me, this is a bit overdone. And I see this is a volatile group, similar to GDX. And we'll look at that as well. I just see a little bit of consolidation here down to 30. Maybe not quite as bad as 30 even. That would be kind of a gross give back of its gains. But 30.5, I think, makes total sense. That's a 20-day moving average. This has come very quickly recently. So can it go a little bit higher tomorrow to 33 even tops? Yeah, maybe. But after that, for the next 2 weeks or so, I do see more of a bearish distribution to this down to about 30.5. But congrats if you are in silver. It's up to you if you want to take those gains, but today you are at a 52-week high. Next, something not metal related, South Korea. We were looking at this one and the renaissance that they're trying to have here above their moving average. Look at this thing. we were looking at this. This is up 2% today, and that's a multiple standard deviation move. You always want to combine technical analysis with kind of quantitative understanding of. So there are bidders here. We're trading above 70 RSI, literally, technically meaning overbought, and the 200-day moving average is starting to flatten, and you are at what is this? 6-month highs. That is good bullish sentiment and technical indicators, right? The only thing is, similar to silver, I think this has run up quite a bit. This looked like a great buy right around May 22nd. Right around here, once you had a week basing above a still sliding low return to moving average, but this looked like a much better buy at 58. And I had, for full disclosure, full target of 60 even. We are now trying to target $66. I think that's a little bit much. I would think this consolidates towards about back to that $60 level over the next 2 weeks. So just be careful, though. The chart looks extraordinary. And this is held at 200-day moving average since May 14th. That is very, very good. 3 weeks above the 200-day moving average. And look at this, holding 50 RSI going all the way back to April 10th. So essentially the week of the S&P lows, they flocked in to South Korea. Again, I believe Samsung is the major holder of EWI. I could be wrong on that, actually. Let me check that out for a sec, what it is these days. I'd have to check. I think it is Samsung. I could be brain farting on that. But South Korea looking very strong here. I think it may have come just a little bit too far, but very impressive. I do expect that 58 to hold, and this is a turnaround story. And then another thing, I didn't want to make this all metals related, but there weren't many big moves up today after Tesla dragged down some major beta related names. The COPX they flocked into up nearly 2% today, up 1.7%. Kind of almost a similar picture, trying to stage a turnaround in its 200-day moving average, which is right here. You can't really see it's that black box right there, but it's at 41 even, we'll call it. Stock today trading all the way up to 43. These are the copper miners. Similar chart. I mean, I wish I had better things to say about these areas besides that they ran up just a bit much in the short term. This was a $39 ETF 2 weeks ago. Now we're going to 43. A 10% gain, 2% today. I just think this consolidates to about $41. I think it's going to tango with that 200-day moving average over the next 2 weeks, but definitely, obviously, short-term momentum here. Also kind of a doji here where it closed near the lows, dealing with a heavy resistance of 43 that it really has not been able to overcome since election week. So not giving me extremely warm fuzzies. Potentially sell the 44 calls on this. You do have to check the ATR and also the liquidity on this. Potentially there's a better way to play it. We are overbought for the first time, I will say, since September, which was the 52-week high. I just think it's potentially running out. I'm curious to see where this goes in the next week or two. But today, one of the larger gainers. So again, today, Tesla was not the place to be. We'll say where the areas were to avoid, but the areas to be in were silver, South Korea, and the copper miners. If you were in that today, congratulations, you evaded a bit of the storm today. Now let's look at where the heart of the mess was. And a friend on Twitter, on FinTwit, Donovan, was I believe, showcasing XLY has to make up its mind. Which way is it going to go? Well, today it took a decent plunge down 2.5%. You see a rising 200-day moving average. It was in purgatory. Similar, this is emblematic of the larger market, as we are a 70% dominated consumer economy. So this was in a drawdown from March 10th to May 12th, very similar to SPY. And here we are basically right to the 200-day moving average. Again, when one of the largest holders, Tesla's down 15%. This is going to get dragged through the mud. For those that don't know, XLY is the Tesla, Amazon, Home Depot fund. Together, they comprise, I believe, 60% or so of the fund. So that's what that is. This has dropped all the way to a sub 50 RSI as well for the first time since April 23rd. So not giving me extremely warm fuzzies there. I think it's worth the risk to pick this up around right here. The 21-day exponential is 211. Your 200-day is 208. Could it tangle a little bit and go underneath to about 207, 206? Yes, but I think that's controlled risk. I don't hate the idea. Obviously, you don't want to have more Musk-Trump comments in public, because XLY will be directly affected. You can also do a pairs trade if you think one was overdone. You could buy XLY thinking that the consumer is protected, and then selling Tesla thinking that the public spat becomes worse. You could do that, and then you were somewhat, protected from significant catalyst events, as it were, and you still have, your risk hedged, essentially. So you could do that trade as well. Not a great looking ETF in terms of being oversold numerous times. Love that little meerkat getting overbought for a glimpse May 16th, but still could not break out above that 220 level, which it's been stuck since February 21st, which was the former SPY all-time high when we hit 613 in SPY. So overall, though, I kind of don't hate this for the next 2 weeks. It's probably going to spend a little more time basing right around this 208 level, but I still do think over the next 2 weeks this heads towards about 220. I think it makes a little bit more inroads, and I think it does get to 220. 218 safer, 220 will get kind of nosebleed territory. It's going to have a hard time breaking to that. But I do think, I don't want to say the bottom is in, but I don't hate the idea of selling 207 puts. Be careful and, potentially look at shorter time frames. But XLY got absolutely hammered. Let's look at ARK down similar, 2.5%. Right there, down 2.8%. So here's ARK, a better looking chart. It's not right on the 200-day moving average. It's got a little bit of room to go, but similar in terms of that. It could not break above 59, similar to where those levels were of this stock, rather, or ETF, I should say, from February levels. So here is ARK. Yeah, I've obviously got hit today, nearly 3%. I still think it has a constructive 2 weeks, and this heads towards $60 in the next 2 weeks. So similar ideas. You'd have to check the delta on this, but I definitely don't hate the idea of selling 53 puts. I think that is okay. You can also buy call spreads, but position size it correctly. I would say, potentially size this for max loss in terms of if it bases here, you're obviously going to get your face ripped off in the options if it stays stuck between 53 and 59. But I do think this has a constructive bullish 2 weeks as it heads towards $60. And overall, just fundamentally, with the market less than 3% away from all-time highs and Bitcoin still over 100, that shows me risk appetite is on. I still would rather be long this than short, and ARK is not just the Tesla basket. So I still think this is constructive. And again, this is 55 RSI. This could go down still a little bit of ways down to 54 or so, but I think it's a buy. The next one, IBIT, the third worst place to be today. So it was XLY, Tesla friendly fire there, ARK similar, and then Bitcoin down 3%. We'll look at Bitcoin as well, as it's had a nasty week coming off the all-time highs for IBIT. May 22nd, right before Memorial Day, we were at $64, and here we are down to 57.5. The forecast for IBIT, so short term, obviously it's still the best performing ETF over the past year. I like it here. I think it's going to base right around its 21-day exponential moving average, which is 59. I think you got a little bit of a discount here. Today is Thursday night. I want to see how this trades this evening into tomorrow and the weekend, of course. But I think this hedges, Freudian slip. I think this heads towards $63, inching very close to the all-time highs over the next 2 weeks. I think this has a bullish run. So also, obviously, ARK and IBIT are somewhat correlated. You could do a pair trade on that, see which setup you like better. You could buy one and sell the other, or buy a call spread, sell a call spread, buy a put spread, sell a put spread, etc. And you have to check the IV rank, which is, of course, where implied volatility sits in terms of its last year high-low, basically, range. But I like IBIT. I think this heads towards 63. I think you got about $6 of upside over the next 2 weeks, and that means that Bitcoin will get very close to its all-time highs. I do feel the animal spirit starting to brew a little bit. Of course, today, Tesla took a little bit out of the market sales with the Qs being the worst index of the majors, down 75 bips. Top three gainers of the past 5 days, and we've not done an ETF report since Friday, so let's get into it. I don't usually cover this, but this is hard to ignore. The Silver Miners has been your best place to be in the past 5 days, even more than silver. This is up 13% in the past 5 days. Average of almost 3% a day. Today did more than that, did 4% to new 52-week highs, overbought. It's funny, when we were mentioning this on the chart report with Straza from All Star Charts last week, I was saying it's interesting. silver had still been lagging, but the SIL silver miners were continuing to make new 52-week highs. And I said for that reason alone, I think it's worth it probably to still own silver. Similar thesis, though, in terms of silver being fully valued here. I think calm the jets a little bit on this. Again, this hit 49.75, and they sold it down a little bit down to 40.85. Obviously still bullish at 4%, but I think this has come a little bit too far too fast. Again, this was $42 last week. Now it's 48. Trees don't grow to the sky. And if Rocco didn't just have his vaccine boosters, he would possibly be here, but he's a little under the weather. Yeah, I think this pulls back to about $43 to $44, which is still incredible. That's going to hold the highs of everything of the past year. So silver looks good. Again, the trades that really look good are, dollar sensitive, away from those kinds of trades. So you want to be in gold, you want to be in silver, you want to be in Bitcoin, you want to be in Europe, things like that. European financials, things that are, who's gaining from the dollar's decline. And silver looks decent here. Overbought, an actual bullish confirmation in the silver miners with the highest RSI reading. So this could go a little bit higher to 50 or so, but I do see a little bit of a comeback towards about that 43.5 level to about the next 2.5 weeks. You could sell the 50 call, see what it pays. Be careful. Don't, pick up pennies to get steamrolled. Otherwise, you can also sell call spreads, control your risk. Otherwise, you could buy puts. Be careful because these can move. I'm just looking at I'd have to check the deltas before just, flying things over the seat of my pants. Potentially, July 45 puts. I'd have to look closer at the option chain. But this looks like it's going to come due for a little bit, and I'm bullish this thing. But I just think it's had massive – this has not had a red day since May 29th. And trees don't grow to the sky. This is a perfect exhibit. All right, next. I did not want to keep this all metals related, but the week has really been led by the metals. The second best place to be, not the silver miners, but it is the gold miner junior. So this has been up 2% today. This thing's up 9% in the past week. So just a touch behind the silver miners. Obviously, I'm pretty sure, what I'm going to say is similar, fully targeted, had a great run, great flows in this thing through March, great looking chart. You have a bearish divergence here on new 52-week highs. I'd want to see at least overbought behavior. You got to a 69. I'd want to see the previous RSI crown, which was 75. We didn't get there. Kind of confirms to me that we'll have a come down in this to about $65. You get $5 in your pocket. Trades that scream out at me is selling call spreads or buying put spreads. Check the IV rank for that to see which is more opportune. If it's an IV rank over 70, I typically want to be selling there. If it's under 30, I want to be buying. And you can check this. I don't have it on the screen right here, but this lets me know this is very likely headed to 65 somewhat quickly. So prepare yourself for the gold miners. And if the S&P not rips, but has that move to 600, inspire 6,000 SPX, they'll probably let the foot off the gas in the metals and switch to beta. And that makes sense. The next one, the third best place to be, finally, not something metals related, the ARKG. We were commenting before. I said, guess what? I think the biotechs, specifically through ARKG, could be a decent place to be. But just for a controlled move up towards 23, I don't think it's going to get too close to this 200-day moving average. That's still immensely heavy at 24. And essentially, that's what happened. We got a 10% move, guys. It went from 20 to 22, and that's pretty much it. Right here, I still like it moving. I think it tries to get towards about 23.5. Today it was down 1.5%. But I do think, again, this was the third best place to be this week and the best place to be outside of, the metal miners. So something to be said there. I think this has another move in it over the next week towards 23.5. You could buy call spreads. You could also potentially sell the 21.5 puts, see how liquid those are and what it collects you. Okay. Top three losers of the past 5 days. BITO, the worst place to be in the past week, down 8%. Okay, today down 3%. So a lot of it was today, but BITO not looking too good. The worst place to be for the past week. This has had really quite a fall from those May 22nd. You could see it really a V-shaped. We talk about V-shaped rallies. This is a V-shaped a decline really from the overbought conditions here. Very clear top May 22nd, and now it's under the 200-day moving average. Kind of flat here in BITO. This is different because of the dividends. So be careful. Obviously, IBIT is the star, differently constructed in terms of the Bitcoin futures it borrows against. BITO here, the 200-day moving average is 2110 and flat. We are beneath it by about 60, 70 cents here with this 3% decline. I think it bases here. BITO, not my favorite proxy of trading Bitcoin. I like IBIT better. I even like MicroStrategy better. I'm sorry, Strategy is what it's called. BITO is not the way to capture this. This thing peaked when the Fed cut rates December 17th at $28. So this thing is really not even aligned super with Bitcoin. And I do have dividends here, but it's a different animal trading BITO. So do understand that. They pay $1 dividend, and you can see that here marked by the D, and they do it monthly. All right. So a nice yield on that. It is to be exact, I think it's a crazy dividend yield, $1 every month on a $20 stock. So that's where the difference lies, if you guys didn't know that. So all being said, though, I like this in terms of the next 2 weeks. It potentially has another day or so, but I like the 20 floor on this. So you can potentially sell 20 puts as well. I think this is going to get back to 21 fairly quickly. How high it gets above that, I think it probably hits its head about $22. But BITO, the worst place to be in the past 5 days. Next, no repeating charts, but it's the second worst place to be. And this is mainly due to Tesla's decline today, has been XLY. XLY down 2.25% in the past week. And that is because of today's decline. But overall, going back from this candle, not the place to be, from 217 all the way down to 209. We already had our expression on XLY. I think it bases around here. I don't hate your risk at 210, to be frank. And I think this heads towards about 220. I actually kind of like this trade. I think there's opportunity here, and I like that it's still held at the 50 RSI. Again, Amazon is in this basket, XLY, as is Home Depot. So you kind of hedge your bets. It's not just the Tesla game. And lastly, and this makes me put my bullish hat on a little bit more, third worst place to be, VXX, down 2%. So where did notional get shed this week? It was Bitcoin, consumer discretionary, mainly because of today and Tesla and the public presidential spat, and then volatility. When volatility, you see that start to decline, spidey senses should start to tingle, know that the bottom short term is at least somewhat in. Very interesting here. We are holding the 200-day on volatility. We've not held it since March 26th, so almost a different regime there. The VXX 200-day is at 50.85, we'll call it. It's barely increasing, about 2 cents a day or so. Today, this was up 2%. I think this starts to give back a bit, obviously, as I have bullish thesis over the next 2 weeks to 3 weeks in SPY short term. That would be negative for VXX. I think this begins to decline and heads towards about 49. And as we get closer to SPY all-time highs, VXX should be breaking below its 200-day moving average. So I do think this is in jeopardy. I had recommended buying volatility actually in New Orleans right here just because it got picture pretty for me. And I saw that tag. And I mean, hopefully you would have shed it on May 23rd. But still, again, I wanted to purchase here at 51 is when I put out that signal. And it's still, we are holding above it here at 53 with this increase. That being said, though, as I said, the next 1 to 2 weeks, I do see this shedding, and I see it going beneath its 200-day very soon. I think we're looking at 49 on this puppy in about 1 to 2 weeks' time. So obviously, there's a lot of implications on that. You could sell VXX calls. You can buy short-term VXX puts. Overall, extrapolating in terms of SPX, volatility going lower, you can sell SPX puts. And then look at your rolling strategy, what you want to do there. Potentially just roll, obviously today on the 0 DTE day, if you were selling puts, you would have got hammered. That's why I typically go 1 week out, and you could sell the 15, 17, 20 delta puts, rinse and repeat, and do that. Okay, top 3 trades. Let me see if I have any tickers in the chat. I do not. We will continue. Top 3 trades of the past 5 days. Absolute congratulations. If you were long Silver Miners, Hate the correlation because it's kind of the same trade. Long the gold miner juniors and short BITO. Those are 3 trades that have controlled this past week. All right. So if you were in those, congratulations. We'll try to get you tomorrow with another video. Peace out.